Today, we're jumping right into a high-stakes financial drama that could seriously shake up the crypto world. We're calling it Bitcoin's billion-dollar spiral. So let's just get right to it. It's the question that's buzzing everywhere online, isn't it? If Bitcoin is really the future, why isn't the price at, $200,000 yet? What's holding it back?
Well, there's this wild theory making the rounds, especially on platforms like X, that says the price isn't just stuck, it's being actively suppressed. So in this explainer, we're going to dig in and really investigate the mechanics behind that pretty explosive claim.
And our investigation really starts with one company that's become the absolute center of this whole debate, MicroStrategy. Because what's been happening with their stock? Well, it's a genuine market anomaly. Get this, for a while there, the company's stock was trading so low that you could basically buy its shares and get the Bitcoin it owned at a huge discount. I mean, that's like buying Bitcoin on sale. That just isn't how markets are supposed to work. And it's our first big clue that something much larger is going on here. To really understand what might be happening, we actually have to take a step back, way back, because this isn't some new crypto-only phenomenon. This is a pattern, a recurring debt spiral that has taken down empires and entire nations throughout history. And the blueprint for this trap is shockingly simple. Just 3 steps. First, a country borrows money in a currency it can't print, like gold. Second, some kind of financial shock hits, making it impossible to pay the money back. And third, they're forced to sell off their best assets to their creditors, losing control in the process. Remember those 3 steps. And this isn't just theory. Look at these 2 examples. For the Ottoman Empire, the debt was in gold. For Greece, not that long ago, it was in euros. But the result? Exactly the same. A loss of financial independence and a forced fire sale of national assets. The mechanism is timeless. Okay, so you see the pattern with countries, right? Well, that same devastating pattern doesn't just apply to nations. There's a modern corporate version. And it's a structure so dangerous, it actually got the attention of financial regulators. So back in the early 2000s, the SEC started sounding the alarm on what it called toxic financing. And the structure was, honestly, diabolical. Lenders would give a company a loan, but instead of getting paid back in cash, they'd get paid in company stock. But here's the kicker. The lower the stock price fell, the more shares they would get. This created a twisted incentive for lenders to literally drive the price down to get a bigger piece of the company. The results were an absolute catastrophe. Nearly half the companies that used this structure ended up getting delisted. And this brings us right back to MicroStrategy. Because what they've done is essentially transform themselves from a software business into a massive leveraged bet on one single asset, Bitcoin. I mean, just look at this number. MicroStrategy is holding roughly 650,000 Bitcoin. Just let that sink in for a moment. It is an absolutely mind-boggling amount for one company to control. And to put that into perspective for you, that's nearly 3% of every single Bitcoin that will ever exist. Think about that. One company owns a huge slice of the entire asset class. So here's a really simplified look at their finances. On one side, you have this enormous pile of Bitcoin worth tens of billions. On the other, a pretty big but seemingly manageable pile of debt. At first glance, this looks, relatively safe. But the devil, as they say, is in the details of the cash flow. All right, so what's the trigger? What is the specific mechanism here that could flip this whole thing from a massive success story into a catastrophic spiral? And here it is. This is the core of the problem. MicroStrategy has to pay out around $800 million every single year just to service its debts and other obligations. That's over $2 million a day that has to come from somewhere. This brings us to the single most important variable in this entire story, MNAV. It's a ratio that basically measures if MicroStrategy's stock is trading for more or for less than the actual value of the Bitcoin it holds. You have to pay attention here because this one number determines everything. You see, this one number sets up 2 completely different futures. When MNAV is above 1, things are great. It's a flywheel. The company's stock is worth more than its Bitcoin, so it can just issue new shares to raise cash, pay its bills, and maybe even buy more Bitcoin. It's a virtuous cycle. But if that MNAV number falls below 1, that flywheel slams hard into reverse. They can't issue shares anymore, so they have to burn through their cash, and eventually, they have to start selling Bitcoin. And that is exactly how the debt spiral starts. They sell Bitcoin to pay their bills, but a massive sale like that puts downward pressure on Bitcoin's price. A lower Bitcoin price means MicroStrategy's own assets are worth less, which means the next time they have to sell even more Bitcoin to cover the same costs. It becomes a vicious, accelerating feedback loop. So, is this all some grand conspiracy being cooked up in a secret boardroom? Well, the reality is probably a bit more nuanced, and it really all comes down to a race against time. And look, this isn't just speculation. You have major players like JP Morgan publishing research that is highly critical of MicroStrategy, raising all these red flags about their whole structure. This is the kind of stuff that fuels that narrative that powerful forces are lined up against them. But you might not even need a coordinated attack. What looks like a big conspiracy could just be a lot of different traders and hedge funds all acting in their own self-interest. They see a risky setup, and they're all independently placing bets against it. The effect is the same, though, immense pressure on the stock. And this is the deadline. At its current cash burn rate, if they don't sell any Bitcoin, the company has about 21 months before its reserves run totally dry. The clock is officially ticking. So that is the billion-dollar question we're left with. Is MicroStrategy's massive bet going to create a powerful flywheel that pushes Bitcoin to brand new highs? Or will the pressure on its stock trigger that classic historical debt spiral, forcing a liquidation that could send a shockwave through the entire crypto market? Time, I guess, will tell.